And good afternoon, ladies and gentlemen. My name's James Kemp. I sit on the management team at Afme, and I also have the Afme Technology and Operations Division as part of my groups at Afme. It's my pleasure to welcome you to the Afme European Capital Markets Technology and Innovation Virtual Series. And this week we've got 5 seminars, bite-sized sessions this week, looking at trends in technology and innovation in European capital markets and the policy framework that is emerging. We've got a great turnout. I know we've moved into the virtual world this time, but we've got over 300 delegates joining us from Afme members, regulators, law firms, policymakers, and technology providers. I would like to make a huge thanks to everyone who's given their time and expertise to create this program, in particular the 20 plus leading industry speakers who we look forward to hearing from over the course of the week, and the technology and operations team and the committee that has put together the program. And a big thanks to the Afme team. These events may be virtual, but there's nothing virtual about the amount of effort that needs to go in to make them happen. So huge thanks to them and the technology team in the background working with us. Also, special thanks to the sponsors that we've got, Bitbond, Droid, Eigen Technologies, EY, Finality, Morgan Lewis, Murex, and Protivity. This event simply wouldn't happen without them, and I'm really pleased that they're involved with us on a number of panels. So in the global current climate that we're in, the importance of technology in enabling us to be connected to ensure resilient, well-functioning financial markets has been clear, and that is set to continue. These technologies are bringing together benefits for capital markets, such as improving new products and services for clients, reducing the cost of legacy systems and processes, and enabling new ways of working. We're now seeing in Europe and globally as well a new reg framework that is going to support that's emerging, more focused on specific areas such as operational resilience, crypto assets, cloud computing, AI, and data. So the next few years are going to be critical how this all comes together, how we actually manage to leverage these benefits and efficiency gains, but at the same time, understanding there's going to be new competitors, new ways of doing things. So it's going to be vital that the industry continues to collaborate, and that the regulatory framework provides a level playing field that allows everybody to compete and that remains technology neutral, so that the EU capital markets continue to play a leading role for innovation and technology. So a quick overview of the week. We're going to touch on many of these topics during this week. For our opening webinar today, you'll hear from our panel on opportunities and challenges facing investment banks today and the implications for the future transformation. And that's supported by a report that we put out this morning working with PwC. It's a really timely update to the work we did in 2018, looking at the vision for the investment bank of the future. And we've got a great panel coming up that Mark is going to be leading. And I'll leave that panel to discuss the findings, but I'm encouraging you to find that report and have a read of it. Tomorrow, we're going to focus on the EU Digital Finance Package, which is a comprehensive set of policy proposals looking at innovation. And on Wednesday, we're looking at crypto assets and operational resilience on Thursday. And then on Friday, looking at agile and new ways of working. Now, these events are never short of a few questions for the audience. And we want you to be able to submit questions and participate in polls. So you'll see this option via Slido on the right-hand side of your screens. So that's a button that you click on to get Slido working. You should have that open, and we're going to bring you up a question now, a test question. And that question is this, and this is actually really timely because everybody is struggling with this at the moment. Remote working is the new normal for many people. What video conference system are you mostly using in your day-to-day business? And we've listed here the main ones that are out there that we are seeing: Zoom, WebEx, Skype, BlueJeans, MS Teams, and other. We're really interested, I'm sure you are too, as to which ones people are using in the main. So please click on that and have a look at answering it. While I wait for those results to come in, just to mention, one of the things that we know is missing is the sort of the touch point and networking, and we're trying to bring that to you through a new networking exhibition booth capability that we have. So I recommend that you select the categories and the interest in your networking profile, which can be found in the People's tab, and that will enable you to have some networking capabilities. So let's see if we have got any results coming in from Slido. It looks like it looks like we have a leader out there with MS Teams. Interesting. Zoom. You hear a lot about that one. Interesting to see those out there. Thanks very much for those. That's a good indication of what people are moving to. So I'm now going to hand over to Mark Lever, partner and UK Financial Services Technology Leader at PwC, and his panel, who will be discussing technology transformation at scale in Europe's capital markets. So Mark, over to you, and enjoy the discussions, everybody. Thanks very much.
Thank you very much, James. And welcome, everybody. Good afternoon. Good to be on here. So I am joined on the panel today by 4 guests. I have Brock Arneson, who is the founder of Droit Financial Technologies. I have Vida Rudkin, who is Managing Director and COO for Operations in EMEA at Morgan Stanley. I have Dr. Lewis Liu, who's the co-founder and CEO of Eigen Technologies. And then lastly, we've got Philip Saunders with us, who's a Managing Director at Goldman Sachs. So delighted to have the panel with us today. Now, as James mentioned, we've timed this webinar with the launch of the Afme report that's just gone out, which is titled Tech and Innovation in Europe's Capital Markets, a Renewed Imperative for the Future of the Industry. And I wanted to just share with you a few of the headline messages from that report before we start answering questions with the panel. Now, it's interesting, we did a similar report back in 2018, and this is the updated 2020 vision. Many of the themes in the report are the same. It's interesting that 24 banks took part in pulling this paper together. Most banks believe they're not as progressed with their technology-related transformation as they thought they might be back in 2018. But it's interesting, they are now more optimistic about their plans for technology-driven transformation across their organizations. On the subject of investment in change, we've moved from a position where 28% of banks thought they had sufficient investment in technology to now a position where 50% do. But it's interesting that still the big focus is on short-term return on investment. On the key technologies that we talk about in the report, there have obviously been significant advances in things like areas like data analytics and cloud technologies since we did the initial report. But for areas like distributed ledger technology, the positives in terms of the gains have been relatively limited in that period. But all banks feel that they're still at early days in their maturity of making the most of the technology. On cyber, operational resilience, and third-party partnerships, it's interesting, there seems to be less of a focus on cyber this time. It's the sense that maybe the controls and the investment that's been made is working, but more of a focus on operational resilience and third-party risk management, including having more attention from the regulators in these areas. There's a sense that when it relates to the regulators, actually, the amount of work that needs to be done to support the requirements of the regulators is still very much as it was 2 years ago. Culture, ways of working, and workforce are also covered in the report. And interestingly, culture and the silos within organizations are still seen as major barriers to moving technology-driven transformation forward within these organizations. Lastly, the report talks a little bit about COVID and how the industry has stood up to the pressures of COVID-19 and how it may act as a catalyst going forward for pushing forward technology-driven transformation further. So look, those are a few of the highlights of the report, and as James said, we do encourage you to please have a look at that. Now, what I'm going to do is I'm going to ask my panel guests just to briefly introduce themselves. So, Brock, if I start with you, please.
Thank you very much. My name is Brock Arneson. I'm the founder of Droit Financial Technologies, or Droit as we call it. We're a financial technology firm specializing in the intersection between computational law and finance. And most of our clients are large and complex financial institutions, including several that are on this panel today.
Great. Thank you, Brock. And now can I move across to Vida?
Hi, so my name is Vida Rudkin. I'm a member of the Afme Tech and Ops Committee. So on behalf of the committee, delighted to welcome you all here today. My day job, as you said, I work at Morgan Stanley. I'm responsible from an EMEA perspective for operations risk and regulatory control. And I'm also the EMEA operations COO.
Thank you, Vida. And then I'll move across to Philip.
Hi, yes, Philip Saunders. I am in the engineering division at Goldman Sachs. I've been there for 19 years. And I am also the deputy chair of the Tech and Ops Committee. Within Goldman, my role is really about running the big programs, of which we've had many, either business related or in particular over recent years, I guess, regulatory related.
Thank you. And lastly, Lewis.
Hi, everyone. I'm Louis Liu, co-founder and CEO of Eigen Technologies. We are a fintech document AI company backed by Goldman Sachs, ING, and many others. We work with about 1/3 of the world's GSIB banks, including 4 of the big 6 U.S. banks. And what we fundamentally do is we transform your documents into structured, usable data for regulatory, operational, or alpha generation purposes.
Thanks, Lewis. So we'll get the panel underway, and I'll start with a question to each of the panel members. To what extent are banks transforming the way they operate, leveraging the opportunities provided by technology? Could I start with Philip?
Sure. So look, I think we're in a really exciting period. Look, I mentioned I've been at Goldman Sachs for 19 years and I've worked in tech for a little longer than that too, which I'd rather not go into. But look, in all that time, technology has clearly been important, but it's never quite been at the forefront as it is of our industry at the moment. So clearly it's going to be critical for firms like us to prosper that we leverage those opportunities. So I look at this question really from my personal experience and the way that I think myself and my team within Goldman Sachs have been thinking about this, which I think has been quite successful. One of the way that we particularly look at it is to really jump on the back of some of our other perhaps non-discretionary programs. So, for example, when we set up programs such as MiFID II, or more recently things like Brexit, LIBOR reformation, etc., we ask ourselves, how can we use those programs to move forward our transformation agenda? So I look at MiFID II particularly. Our goal was just not to be MiFID II compliant, clearly that was a big part of it, but also to use that spend, use that investment to move forward our digital transformation. And in fact, part of that was using firms like some of those joining us in this panel. But the specific area maybe to mention, to drill on one item, was part of that program. It was a big data program. So we were looking to use that to create domain models for our business, which was really a building block for much of our digital transformation. We'd already started on that before the MiFID II program, but probably made pretty slow progress. But we actually made it a mandate on that particular program for that particular spend that every MiFID in scope product, which was pretty much most of our products, had to be modeled using our common method of tooling for data. And it's great that our MiFID reporting could then be leveraged using that tooling, using that data, but we could then use it for pretty much anything else we do. So that program specifically was this massive push in our evolution of our own models and modeling applications. Now at that time, we didn't think there was necessarily an industry standard model that we could use or necessarily quite appropriate modeling tools, particularly looking at data that can really not just map the static how a product looks, but also how a product moves over time and the events and the services that happen on those products. if it happened now, there's perhaps tools more available. But in fact, what we did is the transformation a little bit in reverse, in terms of we actually said, okay, now we've got those tools, let's make them available to the market. So, one of our many tenets, I guess, of our digital transformation is to use open source. But this is an area where we've actually looked at the tools that we've used and open source them. And people will see and may have heard of things like the Legend product, which is something that we've done recently to say, well, actually, the real benefit of some of the tools we produce and some of those data models is really more for the industry to enable us to collaborate together. And we've been a big part of, as many others have, as part of Afme, the common domain model move. And it's actually been great to see that some of the tools that we put into open source are now being used to extend that common domain model in the industry. The most recent example being in FX options. So sort of a summary of what I'm trying to say is, by pushing a common digital way of describing those products across the industry, will it be a bit of a base tool for the industry, and for us particularly, we're very keen to enable our transformation.
Thank you, Philip, and good to hear there that you've used the event of sort of regulatory requirements to actually drive transforming your own architecture and moving towards your strategic solutions. Philip's obviously expressing a view from a bank. It'd be good to hear from one of our panelists who comes from the technology industry. So I wonder, Brock, could you give your view on the same question?
Certainly. So to pull back for a moment, digital transformation is, I think, perceived by many people as meaning different things. I think at its core, digital transformation is an effort to be able to systematize and automate many of the processes that take place within an institution, with an overall goal to, in my view, reduce the marginal cost of responsiveness to change. In other words, to be able to adapt quickly, to be able to have processes and decisions made consistently and transparently within an institution. And there are a couple of elements to that. As alluded to earlier, I think that data and understanding common representations of data at different points within an institution and external to that institution is extremely beneficial. Understanding and modeling process and logic as data itself takes that to the next level and allows those representations to be amenable to systematization, and you can do some very interesting things with that. So the way that I see trading evolving and what we've seen with our clients over time is that in the new world, you need to understand what I would call the rules of exchange. And the rules of exchange have a number of different components. One component is a simple understanding of market infrastructure. What can I trade? Where can I trade it? But there's another dimension which is quite significant, and that dimension is one of regulation. So what rules am I subject to for this prospective transaction, and how may I comply with those rules? Understanding this regulatory context, understanding internal policy, understanding market infrastructure rules, and combining these things together in an automated fashion allows you to make decisions transparently, systematically, and repeatably, and to make them consistently across asset classes and within an institution. So we've engaged with a number of teams whose global remit is digital transformation. And part of where we fit into that is to be that kind of regulatory brain, right, that sits within an institution, allows you to model a standard consensus view of regulation and how it applies, and to be able to plug that into one's internal process, as well as to be able to take internal rules and contextualize that. So if you can create that kind of infrastructure and you can put that kind of process in place in your institution, then when the environment itself changes, you'll have built the tools and process to be able to update the various pieces of your infrastructure and to be able to adapt quickly at low operational risk and at low cost. Thank you.
Okay, thank you, Brock. And Vida, moving across to you, so hearing from another bank, just wondering, in your organization, how have you seen the way the bank operates changing as a result of the opportunities provided by technology?
Okay, so I guess if I come at it from a slightly different angle, from the operations lens, which is the area that I'm in. So what I've seen is that we're trying lots of different things. So perhaps not on the scale of some of the things that Philip has spoken about, but definitely some interesting use of newer technology applied in different ways. So, for example, to give you a few things, data analytics. So what's been really interesting in the operations space is actually making that skill of data analytics more of a kind of day-to-day operations person's job, so that we're upskilling people and asking them to apply that technology, giving them the tooling and apply it onto data sets they use every day anyway. And some good examples in reconciliation functions, for example, doing root cause analysis, understanding what's driving breaks and fails, trying to predict where some of that is and actually to solve problems and clean things up has been a really good and interesting use case. Another one is through risk. So looking at operational risk, where are issues happening? Why is that? Where are the thematics? And then the other angle has been on kind of dabbling with the machine learning type capabilities. And a lot of this initially was around optical character recognition, but, applying those sorts of technologies to things that ops people are doing, for example, payment alerts, transaction screening, so looking for keywords, looking for things that might be triggers for follow-ups. Also doing things like confirmations, and actually even applying it to regulatory reporting on a small scale. So where you get standard queries in, you look for keywords, and then you format what might be an output that a user can then check. So applying make use of technologies and apply them to what an operations professional does, which tends to be heavily manual and quite sort of, there's different workload drivers, but that's what we're seeing.
Great. And then lastly, Lewis, can I come to you to get another perspective from the tech industry of what you see banks doing?
Sure, of course. I really want to, I guess, echo Philip's point here around some of these, I think, regulatory pain points like Brexit or LIBOR, or even a couple of years ago, Dodd-Frank qualified financial contracts, have been a really great catalyst for change in some of the digitalization processes. So just to give you sort of an example, as a company, we really came to, I guess, the forefront of the market by helping a large U.S. investment bank comply with Dodd-Frank QFC. For those of you who are not familiar, this really involves analyzing all of the markets-related documents from ISDAs to GMRAs and answering some very specific regulatory questions around cross-defaults, downgrade triggers, things like that, but at a level of scale and a level of like the speed that was previously not required. And this bank, after we've internalized this, may put this into production. When LIBOR came about, when Brexit came about, actually, it was much because the backbone of the technology was already there. It was very easy to spin up Brexit-related queries, very easy to spin up LIBOR-related queries. In fact, I think this bank actually managed to finish its LIBOR-related queries much faster than its peers. So I think there is even though regulation is painful, and it's a big sort of question for many banking CEOs. I think I sort of agree with many of the people here, it's been Brock as well, that it is a great catalyst to bring about that kind of transformational agenda that you've always wanted to, and you can actually use some of your non-discretionary spend to actually do that. So I think, for us, I think it's a great opportunity, but I think for the industry, it's a time to maybe sort of clean up your tech stack as well.
Great. Thanks, Lewis. So look, I'm hearing from all four speakers some really positive messages around the progress that they've been making with their technology. Maybe just moving to recent events and obviously the challenges of the pandemic. We're interested in the panel's views on actually how well the industry has coped with COVID-19, and has it in any way impacted the change agenda of the banks in terms of how they're using technology. And I just wonder, Vida, could I ask you on how you feel the industry's responded to COVID-19?
Yeah, certainly. Look, I think better than yeah, I think we responded very well, right? And considering the scale and the duration of what we're dealing with, all of us, I think many of us would say that perhaps the industry's coped better than we'd expected. We obviously all had business continuity plans and we do testing, but I'm not sure anybody expected anything to go to this scale and for this duration. So many firms, and my own firm included, had a lot of capability in terms of remote access, but we needed to add capacity and processing power because the volume of I guess that was flowing through those processes and those systems was more than we'd expected. But some of those teething issues were managed and handled pretty quickly, pretty early on. And then, I think we learned a lot from the whole thing in terms of, well, working from home, right? I think a lot of us thought that war sites or, transference were the ways that we would deal with outages like this. But actually, given the scale and duration, working from home is the default. So we've learned a lot from it. So overall, yes, to answer that question, I think the industry did well. But your question on investment agenda is interesting because I don't actually think that the key drivers for the investment agenda have actually changed, right? We're still largely driven by regulation. I think a lot of us had hoped by now that regulation would be slightly less of a percentage of our investment spend than it is, but it continues to be a really big focus. We're still bedding in some of the regulations. The recently we went live. We've got operational resilience, on the agenda. Efficiency is still there. So what I have seen is some acceleration of some of that spend where it made sense. So, for example, investment in key management information, dashboards, that sort of stuff that was actually pretty critical during COVID to have information more to your fingertips and in a more dynamic way. There were things that were on the agenda, but they've happened a little bit quicker, which is a good thing from my perspective. And we've seen a bit of a pivot in terms of rather than silo-based sort of planning and prioritization of investment, we had started this journey, but it's really kind of accelerated it, is the kind of pivot to front to back. So really working and partnering with all the areas in the organization and saying, well, what's the right decision for spend to have the biggest impact, across the plant. So I'd say we continue to focus on the same things. There's been a little bit of acceleration, but it's the same things driving the agenda. And really the way that we're working maybe is slightly changing at a faster pace to agile, faster front to back collaboration.
Great. And I just wonder, Philip, so across the street at another big American bank and one of the main rival of Vida's firm, are you seeing the same kind of thing where you are, and have you got the same perspectives on the industry?
Yeah, no, I would say our story is very similar, so I won't repeat too much of what Vida's just said. I mean, I think we do have to be careful that we overemphasize the broader effect of what we've been through. Yes, we have coped very well. How much has actually changed? Well, yes, in terms of workplace technology, clearly there's been some acceleration in that space in terms of rolling out Zoom faster and earlier than we were necessarily going to do without the pandemic. I think the other thing that we've seen is enhanced use of tools like Symphony. I think I saw a stat internally that I think our internal use of Symphony platform has been up over 500% during this period. And that's actually a great tool in terms of to being efficient, not just internally, but also with our clients and such. So they're very specific examples. I guess there are others in terms of, that opened up good conversation with regulators, et cetera, around our use of e-signatures, digital document negotiation, et cetera, being done more virtually. So some of those things, again, has perhaps accelerated. But overall, there's so many other areas that we're trying to transform digitally. We just need to still think to the future, and we need to think about what could happen next, right? What other type of global perhaps crisis could pick up in a very different way than the pandemic has, and are we ahead of the game in those areas in terms of our digital transformation? I'm not quite sure what those areas are. I'm not sure any of us could have forecast the pandemic and our response to that. But I think it does just emphasize the fact that we've got to be ready for any eventuality. And greater digitization seems to be a very positive way of coping with, with future incidents, whatever they might be.
Yep. Great, thanks, Philip. And Brock, is that similarly? Is your perspective? I mean, as an organisation that is no doubt sort of reacting to the market and the demands of banks. Have you seen any shifts in the nature of transformation and what they're demanding from a change perspective because of COVID?
Yes. So I can describe certainly from the perspective of someone who's engaged in an ongoing conversation with our clients and also engaged in a number of, I would call them, developing sales conversations. The reaction that we saw was as follows. In March and April, there was a sort of all hands on deck response to the crisis from most financial institutions and large dealers, where I think everyone who is a decision maker was being drawn into making some very critical internal decisions. And quite understandably, we ourselves were maybe a little earlier than some others in going full remote as a conservative response, but we were back online and working pretty efficiently shortly thereafter. What we saw, though, is that everything went a little smoother than people had thought. And there was dramatic re-engagement in late April. A number of digital initiatives were accelerated, as mentioned earlier. This is something that we saw across the street, and I think that if anything, it accelerated the sales process and the decision that needing to approach things in a kind of systematic, repeatable, auditable fashion was made actually more important by something like COVID. So we actually saw a slowdown at first, and then an acceleration that has continued to this point of the year.
Great, thank you. And certainly, I mean, this was a question that we asked in the Afme report, and there was a sense that, look, if the pandemic had come 5 years earlier, certainly in terms of our desktop technology and remote working type capabilities, it would have been a lot harder to deal with it than maybe it has been right now. And actually, the industry has shown a huge amount of resilience in terms of its ability to cope. So if we just move on to the next question, and actually before I move to the next question, I do notice on the Q&A on Slido there are no questions yet. We will get to questions at the end, but please feel free to ask questions as you go, and then we'll try and pick as many of those up as possible at the end. So the next question we had was, what other external factors are in fact impacting investment? And particularly, what are you seeing in terms of new regulatory requirements impacting investment? Now, I'm conscious I keep going to the banks first because it sounds like a question that's very much directed at the banks. Vida, could I start with you for that question?
So look, regulation, as I said earlier, it doesn't seem to be easing up anytime soon. I think we're still bedding in, for example, SFTR that didn't go live that long ago. Operational resilience is a pretty big topic, and obviously with many regulators looking at it and perhaps not all in exactly the same way. That's been an interesting one that's influencing. And actually very topical given what we're going through, but also a very broad topic. And then we, clearly for those of us in impacted by Brexit, that's still yet to come, right? So I think regulation's still there. I think the other thing that we see sort of impacting is cyber. So from a cyber perspective, in the current environment, we have seen an increase in business email compromise attempts. I'm sure there's lots more that I don't see behind the scenes from a technical perspective, but awareness and education of staff around cyber fraud, the increasing controls that you can have around that space where you can control things really is another factor externally that's really impacting, and we're seeing emerging guidance around.
Great, thank you for that, Vida. And Lewis, just wondering your views from the outside. What are you seeing in terms of those external impacts on change agendas, and particularly the impact of regulators?
Yeah, I think I sort of will classify this into two buckets. One bucket that I would call capital related, and the other bucket I would call sort of conduct related. So capital related, for example, would be something like Basel 3.1, or banks might call it Basel 4, where we're seeing sort of increasing, I think, pressure on our clients to actually understand the underlying documentation significantly better. So, for example, if you have a revolving credit facility and you want, under Basel 3.1, you certainly need to understand the right to review. And those terms, which was previously never really analyzed, now suddenly have come to the forefront. Another sort of interesting example that is capital related as a lot of our clients are starting to come to us with ESG queries. So understanding, are there actually some climate change related covenants in the loan documentation? Because I think if those of you who recall, when Mark Carney was governor of Bank of England, he actually proposed this idea where ESG related sort of terminology or usage of capital would impact RWA calculation. So that's sort of an area that we see sort of increasing. I think the other area, which is sort of conduct related, I think we all know about, questions around MiFID or questions around LIBOR. So I won't sort of go into that in that much detail. But I will say one thing, which is just that the scale of LIBOR is pretty extreme. For most banks, that's millions of documents to be reviewed, and I think it is a really great opportunity to really digitize everything and to really take that take that pain point and make it into something I think quite useful in the future. One final thing I will say is that because LIBOR has not let me just say that the inflation data still has not changed despite COVID. I think that what's sort of interesting is what we're seeing is that a lot of renegotiation that's happening on the sort of COVID-related side. So, for example, you want to renegotiate your covenants or renegotiate some of these things are now coinciding with things like negative rates and coinciding with LIBOR. So I think this is a sort of a perfect storm of both markets and regulatory that I think has accelerated for us, as Brock mentioned, accelerated our sales cycles.
Great. Thank you, Lewis. And Philip, just wondering from your perspective, what external influences are you seeing, and which are the major regs that you're now, what are the regulators addressing towards you now?
Yeah, I mean, it's, I again agree with Vida a lot in terms of there's still a lot of regulation happening. I do feel, though, that we're perhaps over the hump of some of the largest amount of the post-financial crisis regulation. And, I like to have a positive outlook, but I do think in some ways the regulation that's emerging is regulation that I, as an engineer or technologist, can get a little bit more excited about, because a lot of the regulatory focus now is on these new technologies. And so it's really important for us to be very close to that, because actually that's going to be part of the way that we allow some of the digital transformation to happen, because we need the regulation to support that transformation, as long as it's done in a sensible way. If I looked at one particular space around digital assets at the moment, if you look at existing market rules, they're not necessarily written with these sorts of DLT, etc. technologies in mind. So they can be quite difficult to apply. So we actually need the regulation almost to catch up with the technologies in that space, and welcome regulation in that sense. And also, digital assets for a primary market, you need a strong secondary market to support. Well, it's going to be difficult to get strong secondary market support when there's regulatory uncertainty. So again, we actually need some regulation in this case to help move forward with our digital assets. And also, it needs to be as much as possible joined up across jurisdictions. Simple things in terms of just the nomenclature used around digital assets seems to be a little different in different jurisdictions. And again, to give confidence in the market, for allow banks like ourselves to be able to use these products, we actually need the regulators to help us to provide that certainty, to provide that sort of cross-jurisdiction ability that we like in this space. So it's in some ways it's a much more positive regulation, I think of it at this point, because it's actually helping us to do some of the things that we'd like to do and take advantage of some of these technologies.
And can I ask, just as a follow-up to that, I mean, there's I guess, a bit of a sense, I suppose, in the world with relatively populist governments across the world that there might be more localism and risk that there is less collaboration on a global basis. I was just wondering, looking at the regulators, do you feel that there's continuing convergence between the requirements of regulators, or have you seen any move away from that in recent years as other events have been taking place in the world?
Yeah, look, I'm no political analyst, so I'm not the expert in this space. But certainly, I always feel that there are political statements always being made, but what tends to happen behind the scenes, the right teams, the right groups, the right banks, the right market players, etc., the right infrastructure organizations get together to talk, and that's the most important thing. So whatever might be coming out politically from a politician, often behind the scenes, actually the right things are happening. And that's again, I'm putting my positive approach on the world at this point. But generally, markets from different countries are very, very keen to work together, even if the politicians have to say something a little bit different.
Well, that's good to hear. Thanks for that, Philip. So just moving on to the next question, and this will be one, I'm going to direct this at Brock. What do you see as some of the main barriers for further tech-driven transformation in the industry at the moment?
So I would say that the main barriers to tech-driven industry transformation relate to overcoming a kind of a inertia of having built a number of different systems that are essentially reactive in responsiveness by asset class, by regulation, some historical acquisitions of different technology firms. So there's really just a need to sort of internalize and understand what a common infrastructure and what the core requirements of that transformation should be. I think that there's also a bit of a hodgepodge of internal policies that people have that are reactive as well, and that have been put into place to perhaps outline how things should work rather than be observed in practice, right? So I think that the hard decision of understanding that a systematic approach is required, of making sure that that is understood and budgeted for in a global sense, these are really where the challenges are. Because I think that one of the main problems here is that if you think about what you need something that is consistent in many different areas of a firm, in many different components in a vertical infrastructure. But that's usually not the way that these things are budgeted. So in order to put that kind of centralized effort into place to drive that transformation may actually be a significant initial investment, and it's always easier to work around the edges of your investment rather than make that transformational investment in one shot. But I do think that this is a common theme among financial institutions, that their digital transformation groups are attempting to build that kind of internal agreement for horizontal investment to enable that kind of meaningful change and consistency.
And thanks for that, Brock. Certainly in the report, we saw quite a lot of talk of the challenges of silo-based thinking still within organizations and driving major change. Just moving to Vida. Vida, what do you see as some of the major barriers to driving change in your organization and the industry?
Yeah, I think cost pressures has always been there and will always continue to be there. So that's a challenge, particularly in a year like this year. But the two things that I think are some of the biggest barriers, and it was interesting to see in the report when I was scanning through it this morning that these have actually moved up from the last time we surveyed. But I think culture and I think senior sponsorship. So. And what I mean by that is that we're all thinking about different ways of working. we're all sort of trying to be more agile in our approach, and all those things are great. There's been a lot of training of staff that's gone on. Teams are obviously having to be restructured to work in those ways. But interestingly, unless we as senior managers in the organization are thinking in a slightly different way and accepting of different deliverables, outputs, ways of doing things, different ways of decision making than maybe those of us who've been around for 20 years are used to, then it's very difficult for those teams to really continue to move in that direction and to be impactful in the different ways of working. So I think there's a little bit, when I say executive sponsorship, I think I'm thinking about kind of the catching up of the wave of move to working in a new way has to be at all levels in the organization. And I feel it's been probably more at the kind of grassroots level than it has been at the top level. And that sort of, and related to that is culture, right? So it's that whole embracing change, which I do think everyone's come a massive way in the last couple of years to working in different ways, to being more agile, but taking it even further, like you start to question the, a change team versus a run the bank team versus technologist. Actually, we're all looking at it with slightly different angles, but trying to do the same thing. So do operating models change, and is there a broader cultural change than just the embracing that we think we should do something different? So for me, that culture and that senior sponsorship are probably the two biggest ones, and I was really interested, as I said, to see that they've moved up the list in the report.
Great, thank you, Vida. And please, can I ask just for the audience to keep some questions coming in, please. We've got a couple of questions, but it'd be good to see some more on Slido. So just sort of flipping around that question and maybe turning it more to, so if there are one or two key actions that the banks and the industry should be taking to accelerate the pace and scale of tech-driven change within the industry, what are the sort of one or two things that the panelists would suggest? In the report, we talk about a sort of call to action for the banks. I'd be interested in your views on the steps we think organizations should take. Could I start with Lewis, that question?
Of course. I'll actually start with an interesting statistic. And so if we take, I talk about if we take my core markets, right, which is Europe and the US, across the US and across Europe, ex-UK, so taking out UK, we work with something like about 50+% of the GSIBs. Within the UK itself, we work with none of the GSIBs. And what's so clearly, I question my sales team. I understand what's really going on here. And what's super interesting is when I ask the sales reps, why we have so much great traction with these large European banks and these large American banks, and why don't we have anything here? They all come back and say, well, actually, Liz, I think the senior management regime, or SMR, actually makes people a little bit spooky about using certain types of AI or machine learning technology, which sort of it's less about the SMR than actually about the culture that sort of infuses within a lot of the banks here. And so that's a really interesting, I think, for me, sort of just statistic in terms of culture, how culture plays into decision making, and so I think actually one thing is just to really think about when you adapt a lot of these new technologies, machine learning or blockchain or DLT or whatever it is, think far more broadly and statistically about the risks of these technologies and not just sort of some of the political implications of that. And I think that's sort of a pretty harsh statement, but I think that's one area that I would recommend. I think the second area that I would really think about is and I think many of you already mentioned this, and Brock, you mentioned about sort of horizontal transformation versus specific vertical ones. Something that I've noticed that's interesting about clients who've been really successful with Eigen, right, is that we first might try to start with one use case, maybe a LIBOR, maybe CLO trading, maybe something else. But those that actually view technology as a broad strategic capability with multiple use cases attached to it, as opposed to trying to solve one-off problems, oftentimes get the maximum return on investment across the technology platform. Because let's face it, it's very expensive and it's very time consuming to onboard a new vendor into the technology ecosystem. So I would urge everyone to think about these technologies more broadly than that specific use case that you're trying to solve.
Great, thank you, Lewis. And Philip, what are your thoughts on some of the key actions you think the industry should take?
Sure. So I've got two things here. I guess firstly, and I think appropriate as we're on a Afme webinar today, but certainly engaging with Afme, engaging with the regulators. Look, a little bit as I've talked about, I think it's so important that we get the environment right, the collaboration right, and the industry. We want to reduce the friction points. We want to make the technology regulated in the right way. So it's really important that we all engage so that we end up with the right result. And then secondly, I think looking more internally as a firm, I sort of map this similar to how you might think about a personal development plan almost, in terms of, it's room 101 type or training course 101, I should say, type lesson, in terms of you never get to your goals unless you've written them down, you've understood them, you drive towards them. In the same way, your digital transformation for a firm won't just happen as you move along doing a little bit of this, a little bit of that. You may not know exactly what you want in the future, but you've got to at least try and put down in 3 years' time, in 5 years' time, what you think it might look like. So that as you build your projects and as you build your work, you have some sort of map to move towards. You may never get there, and the end goal will change a lot, but you have to be that forward-looking. You have to sort of suggest where are the areas we might go down and try and move towards them. And I think if the individual banks don't do it themselves, someone else will come along and disrupt the industry and do it themselves.
Great. Thank you very much. Now, what I think we'll do is we'll just take a few questions from the audience. So just looking in Slido at some of the questions, the highest polling one. What technology will be the most important for driving banks' digital transformation over the next 5 years? Any volunteers for that question?
I mean, I think in the short term, which in some ways 5 years possibly is, I would probably, if I had to vote for one area, it would be cloud. We haven't really mentioned it on this session. It's certainly in the paper that's been published. But I think, we often talk about cloud as just being something that we would do for cost reasons, and clearly there are potential benefits in that space. But I think the technology itself is just a great enabler from the cloud. And when I speak to engineers in the firm, they're always very excited about the tools that are available, about the fact that it's fun to use almost. So it's something that I think has got a lot of traction already amongst our firms, but I can see it having the biggest impact in the shorter term.
And that's really interesting, Philip. I think it's interesting when we did the survey 2 years ago, there was still quite a bit of reticence about how far we were going to go with cloud adoption, and a sense in many organizations that they had the scale, and because of security concerns, they weren't convinced about full adoption. Whereas we've seen a real shift in thinking around that in the 2 years since we last surveyed the Afme group. So just finding another question. So the second one on the list: are the big investments in technology for regulatory issues such as LIBOR transition setting banks up to do a deeper digital transformation? Now, Lewis, I know you touched on this. Do you want to just say a bit more in response to that question?
Sure, of course. I think it's important to understand the breadth of LIBOR. It's $400 trillion of exposure, 20 times U.S. GDP. All of these underpinned by documents, all of which relate to some product line, and even some clients we've even seen employment contracts that reference LIBOR. And so I think it's a unprecedented industry event from the perspective of just the sheer scale and the sheer cost related to understanding everything. And I think there are several. I'll give you one example of a client. It's a big U.S. regional bank. They basically have never digitized any of their loan documents before, and both from the perspective of OCRing through to the 200, 300 data points that I want to input into Loan IQ. This has all been completely done ad hoc by a manual process. They're taking LIBOR as a very specific opportunity to ask the 20, 30 LIBOR questions around borrower consent and fallback language that they need to get over the LIBOR hump, but taking the rest of the transformation project to really automate the 150 odd questions they want for downstream systems, and then using Eigen or maybe some other technology, to really matter what kind of technology, but this kind of AI analytics tool to be able to jumpstart that transformation. I think we see this not just in the big banks and broker dealers, but we're actually seeing this happen in the buy side firms as well, because the buy side firms also need to do the same exercise. And I think it's an industry wide opportunity here.
Okay, thank you for that. Rather than just following the polling, I'm gonna zip down to some questions at the end. At this point, cross-industry standardization eases technology transformation burden, but initial investment levels are a blocker. Does this barrier look likely to go away? I wanted to ask that question because in the survey it was seen as an area where there was a desire for more standardization to enable more collaboration and presumably greater efficiencies between organizations. Has anyone got any thoughts on the answer to that question?
I can speak to that a little bit if you'd like.
Thanks, Brock.
So I think it was Lao Tzu who said, "To know others is wisdom. To know oneself is enlightenment." I actually think that the biggest barrier to adopting these sorts of things is having an internal data set that's digitized, well understood, and standardized. And once you actually make those kinds of investments, the overall investment in transformation, regardless of specific technology, just becomes that much easier because you can start applying commonality in the way that you approach the problem and the way that you make those investments. So if I were to sort of tip the hat towards any direction here that I thought was tractable for actually overcoming that investment, it would be to get one's internal house sorted out first. This is something that we've seen in adoption of our own product. Just to use an example without naming any names, there's one very large US-based bank that we've been engaged with for quite some time and that plan to use us in a significant way. But before using us, they needed to rationalize, fix, and understand the quality problems in their internal data models because, in their words, garbage in, garbage out, right? It doesn't matter how good of a product you have if the data that you feed it is not well understood or has problems in ways that you haven't quantified, then you can't rely on those decisions. So I think that as firms make progress understanding and rationalizing their internal structures, increasing the digitization of their documents, making those facts available, that will help drive those types of decisions.
Great. Thank you, Brock. Appreciate that. And good to get a bit of philosophy into the discussion as well. So listen, I look at the time now and we're 1 minute away from the close. So I think we'll have to wrap up there now on our questions. But I think that's been a fascinating discussion with the panel. I'm impressed by the optimism and the positive thinking as we look forward. I mean, I think it obviously it is inevitable that technology-driven transformation is going to change within the sector. I think it's interesting hearing about some of the challenges of cultural change that need to happen to promote that. It's interesting hearing we did about the onus on collaboration and actually working with the regulators to make some of these things possible. Seems like a very mature approach from the industry to dealing with the change ahead. And I like the thing, have a plan, have a roadmap, have a plan for how you're going to deal with these things. So lastly, I want to thank the panelists, Brock, Vida, Lewis, and Philip. Thank you very much for joining us today. And I want to thank the audience as well for coming along. I hope that's been insightful. Thank you for your questions, and have a great rest of your day.
Thank you, Mark, for a fantastic discussion. Thank you to the panelists as well. Great to dive straight into the topic of technology innovation, which is the series all week for our webinars. Can I just thank our sponsors there, Eigen and Dwarf, for their support in this webinar. And thank you to the PwC team as well for developing the paper we've launched today, and to those members of the Technology Operations Committee who supported us in that. Thank you everyone who joined to listen in. Please remember you can access the Brenner platform throughout the week as well. And I will look forward to welcoming you tomorrow for a panel I'm moderating on the EU digital package. Thank you and have a good rest of the day.